Hello and welcome to an FXTimes Daily Market Recap. I'm your fundamental market analyst, Nick Nassad. Today is Monday, April 19, 2010. We start this week with the dollar and the yen gaining against most of its rivals on Monday, at least in overnight trading, as we had lingering concerns over Greece debt, along with worries over what the U.S. case against Goldman Sachs might mean for broader markets, which led investors to the safety of the greenback. Also, we had some concerns over China putting a brake on growth, which added to the overall negative market sentiment, as we also had a very sharp slide in Chinese stocks, and other Asian and European equities were also down for the day. In the U.S. Open, we did have U.S. stocks turn positive, but by mid-New York trading, they had fallen back down into the red. In a look at the euro-dollar pair, we see that it slid further in overnight trading to the 1.3415 level, a drop of around 80 pips from our close on Friday. We moved below all of our moving averages in the 1 hour time frame, with the short-term 50-period moving average even breaking below our 200-period moving average. Today's move also put us at just below the 61.8% retracement of this rally that we saw from the 132.85 level up to 136.90, and we see that we did find support just below that 61% area. In Friday's session, we had moved to the 50% retracement. So we see that the risk aversion from Friday's session extended into overnight trading as Asian and European markets were able to trade the Goldman Sachs news. We did see a slight counter rally in New York trading as U.S. stocks ticked higher in New York early morning trading, but again that rally in U.S. equities failed quickly, and we did turn negative in around noon New York time. The suit against Goldman has rattled investors already nervous about cash-strapped Greece, and with the volcano that we have in Europe, airspace was closed, which canceled a Monday meeting between Greece, the International Monetary Fund, and the European Union. The meeting was supposed to help iron out some of the details about the aid package, but traders will now have to wait till at least Wednesday, which will only drag out this rescue approval process that we've seen with Greece and the Eurozone. What we saw, therefore, was the cost of insuring against the Greek default climb, and as a result, further pressure for the euro. Here we take a look at the euro-yen pair, and we saw that on Friday's session we had a very sharp slide around 250 pips, which put us below an important 125 price level. In today's trading, right at the start of European trading, we saw the yen gain further, testing 123.13, but as I mentioned, we did have a counter rally move throughout the rest of European trading, which hit a high at 124.33, which was our close on Friday's session. In the context of this downswing, therefore, this counter rally move should be seen as a correction. Here we take a look at the dollar-yen pair, a similar situation, sharp slide on Friday. We tested a new low at 91.60, but then we counter rallied and we actually moved above our Friday close as we tested 92.30 area at around 12:30 Eastern. Here too, moving average picture is turning downward, but we are going to test our first 50-period moving average as resistance shortly. So we see that last time we tested it, we rejected that test rather strongly. Zooming this pair out, we see that we had a bit of a sideways consolidation between 93.75 and the 92.85 and perhaps the 92.50 area, and we'll have to see if this pair continues its move back in favor of the greenback, what happens at this level, whether we test it as resistance and continue to further down, or if we're able to manage a break and show some further greenback strength if we move back into this consolidation zone. Taking a further look at risk sentiment, here we have gold prices, which took a very sharp tumble in Friday's session and continue to do so at early European trading. However, here too, we did have a counter rally, though we remained confined within the high we had in our earlier session. So gold prices are a good barometer for commodity prices overall, and so far we're not seeing a further retracement of this downswing. We'll have to see how the Goldman Sachs news affects the broader risk appetite within all financial sectors, and especially in U.S. equities. Taking a look at one of our risk-sensitive and growth-linked and commodity-linked currencies, the Australian dollar, US dollar, we saw a move below our support from last week at around 0.9225. On Friday we had slid, but we had still held that support. Now we moved below that level, and we found our support around 0.9156, which is the support we had in this consolidation zone back in late March, early April. So this break of support is a quite bearish signal, and we'll see what happens around our new support now at 0.9156. We did have the Shanghai Composite Index down 4.8% today, which weighed on the Aussie and other risk appetite currencies. Also, there are concerns that the recent rate hikes by the Reserve Bank of Australia have been too much too fast and that it is cutting into growth. We have seen some weak fundamentals from the housing sector and retail sales, as well as consumer confidence from Australia. So if we have some further news that China is trying to cool its economy and the Reserve Bank of Australia realizes that they need to hold rates perhaps at their 4.25%, then we may see this high at 0.9350 acting as very important resistance going forward, and to those traders that believe that perhaps this pair is a little heavy, that we may see some further selling interest. Again, a lot will hinge on risk sentiment as well as our commodity prices. Our second main commodity-linked currency pair is the US dollar Canadian dollar, and we saw a very sharp surge in favor of the greenback in this pair on Friday's session as we hit 1.0150, and in overnight trading we moved even higher, testing 1.0215 as our high. We followed that up with some volatile trading in New York session as we moved all the way down back to 1.01 below 1.0150, but then recovered and now hover just at 1.02. Tomorrow we do have the Bank of Canada deciding on interest rates, and traders will be looking to see what clues the statement gives about the pace of future rate hikes that should be coming by the end of the second quarter. A hawkish statement could give the Canadian dollar another chance to test this parity level following our decline from 1.03 to parity and now this counter rally. While gold prices are important for the most important for the Australian dollar pair, here we should be looking at oil prices, and so far they've been feeling a pretty big brunt of the risk aversion in the markets since Friday. Currently, as of 12:30 Eastern Time, oil was down 2.6%, trading just above the $81 a barrel level. So that is pressuring the Canadian dollar currently, but if we have a turnaround in risk sentiment plus a hawkish Bank of Canada statement, then we could see this pair these losses we had seen the last two sessions. Pardon these gains. The pound dollar pair meanwhile saw some interesting price action in that we gapped lower to open the week from around 1.5385 down to 1.5287. That broke us out of this consolidation zone we had seen all of last week between 1.5350 and 1.55, and that was a rather bearish indication that put us back into this zone that we had seen back here between 1.5135 and 1.5320. Now we see that resistance from back here acted again as resistance in New York trading after we had this counter rally following our extension of a down move following the gap. So the impetus for the decline in sterling was new polling showing that the third main political party in the UK was gaining support, which makes a stronger case that the upcoming election in the UK will see a hung parliament. Here too, similar to what we saw with the Australian dollar US dollar pair, if this new resistance holds around 1.5320, it may mean that traders feel that the pound may be a little heavy following its rally here starting in March 25th from 1.48 up to 1.55. Now let's take a look at some upcoming fundamental news that could help to drive the currency markets. Tonight, at around 4:45 p.m. Eastern, New Zealand will post its first quarter consumer price index data. That is followed by the Japanese tertiary industry activity index and Australia's RBA meeting minutes. Overnight, we get data from Germany on producer prices, from the Eurozone on current account, and UK on its consumer prices. That will be followed on 5 a.m. by a rather important Germany ZEW Economic Sentiment Index, which is a leading indicator of economic activity in the region. Tomorrow, the fundamental docket is light as there are no key U.S. releases, but we will get the Bank of Canada interest rate decision that we've already talked about earlier in the broadcast. And that will do it for today's recap from our news, videos, and analysis. Please visit our site fxtimes.com. I want to thank you for watching and wish you good trading this week.